Hi there, traders. This is Brad Gilbert with the weekly kickoff, Monday, the 5th of Feb. All right, now, if you hadn't seen it, you've been hiding under a rock. The US non-farm payrolls came out much better than expected. You know, it's one of those weird ones. Just having a look at this picture here, you can sort of see the general flow of what's going on with employment. 2 strong months. Okay, I mean, you can almost put that down to seasonal, right? And you look at the surprises here over the past couple of years. There's been a couple of big ones. These ones, well, they come at a time where the market was basically short dollars, and that's why we saw the sort of moves we did. Now, before you sort of get yourself all bent out of shape, I know a lot of traders come back and look at the outcome on the charts and they go, "Oh man, I should have made loads of money." I can tell you, trading this event, it looks like there's steady price action here, but it wouldn't be. And if you look at how badly the market's been turned over here, right? So clean out on the downside, clean out on the top side. I wouldn't be surprised to see the dollar index back around mid 103s during the week, right? This is just a massive repositioning. Now, the rate cuts in the US have been sort of slowly sort of wound back a bit, but they're still coming, right? So I think this is just a readjustment. The market got itself too short dollars. And I can tell you, just breaking the trend lines, both sides here, and it's on most instruments. This is carnage, right? What that is, like traders getting long as it breaks, getting short when it goes the other way. It's generally a bit of a sorry sight in most traders' accounts, right? And now trying to get into that trade with the data. I mean, even the dollar index, you might have been lucky to get in up around 103.50, 60. There's not much left in it by the time you get set with the gapping and everything else. So don't lose sight of what's happening. The data, the US, the non-farm payrolls gives us an idea of what's happening. Well, it's a head kicker, but the CPI data is the key ones. Now let's just focus on what we can control this week, right? And I've just got the top tier data lined up here on Trading Economics. Sort of Monday, not much. I'd say the ISM services PMI, probably the pick. We've got the RBA interest rate decision on Tuesday. Now, that's going to be very important because all the retail sales, inflation, everything is falling off the face of the earth in Australia. So no change of rates expected. But I would expect a very dovish central bank. Right now, it's down around 65 cents. So we've got to see how the price action is around that. But that's what I'm thinking. They're going to start signaling we aren't too far away from the cuts. Now, as far as high impacting data, you got the CAD PMI, balance of trade. I've never really saw that kick into gear, but the Canadian employment numbers Friday, right? So the CAD is front and center. CAD and CAD crosses. You got to keep that in mind as we go through the week because the data just suggests it, right? It's not like us sort of predicting it. Now, the devil's in the detail here. If I just come through and have a quick look at the sort of add the second tier data, it adds a bit more of a layer on the data, right? So, some services PMI data out of S&P services data out of the US. You come into Tuesday, obviously the RBA rate decision, and then the press conference following that. CAD PMI, you got Euro retail sales, Kiwi employment numbers, right? There's only about 3 or 4 numbers, or maybe even 3, that come out each month on the Kiwi, and the employment ones are one of them. So you'll be watching this one closely as well. Don't forget New Zealand, massive tourist spot. You might see a bit of a spike there on the seasonal surge of tourists, but we'll see how that plays out. You come into Wednesday, if I just sort of scroll down there, not a lot on Wednesday, right? If anything, I've been keeping an eye on the Swiss unemployment rate. You usually don't see much variance there, but obviously that would be important if there was. Halifax House Price Index out of the UK, some crude numbers, blah, blah, blah. Bank of Summary Deliberations from the Bank of Canada. Tell us a bit more about what's going on, what they're thinking. And then you come down into Thursday. Okay, we've got some Chinese numbers again. Now, obviously, well, for those that aren't aware, Australia and New Zealand closely tied geographically as well as China's their biggest export market. So any changes there would impact the Aussie and Kiwi. We've got the weekly jobless claims numbers there. A couple of central bank speakers as well. German inflation numbers. I like these I mean, everything Germany is good, right? It's important for the, the whole Eurozone, probably more important than the Euro numbers. But then, like every second week, we get the Canadian employment numbers on their own, right? This is just a lot easier to get a grasp of, unlike the non-farm payrolls where there's about 6 or 7 different variables, right? So that's where we are. There's a bit to be had, and outside the weeks where there's massive, high impacting numbers, we can often see easier moves. If anything, more sort of towards that sort of short to medium term move. So just keep an eye on the US numbers. If they keep trickling in a little bit stronger, well, then we're going to see the dollar slowly climb, right, as we go through the week. But if they correct, if they're lower, we're going to see the dollar sort of drift back a bit. But I'm not expecting crazy volatility like we did out of the non-farm payrolls. So that makes the trading week a lot more organized, easier to get your teeth around. And you know what? If you are looking at the charts here, I'm going to show you this as well. Like you look at the hourly charts. These are hourly charts, and you can see the carnage, right? And the gaps here. It's like a bit of a bloodbath. But if you come back and have a look at the daily charts, it's business as usual. Nothing has really changed, right? So just have a look at your daily charts. You can see we've got some key levels here on Euro on the downside. Sterling's pretty much mid-range. Aussie, mid-range there as well, but on a massive scale. And Kiwi, not too dissimilar. Dollar CAD, well, this is going to be one of our key currencies for the week, especially as we go into Friday. It's sort of about that mid-range, so is dollar yen. Dollar Swiss has got a nice trend to the downside. I like it, probably the best out of all of them. It's worth keeping an eye on. Obviously, those Swiss unemployment numbers. And the dollar index, well, it hasn't done much either, right? And that's the luxury. If you know how to look at the markets and you go, yeah, wow, I'm looking at the hourly charts here. It's like carnage, man, carnage. And you go to the dailies, you wouldn't think anything happened last week, right? So make sure you look at the longer term perspective to get the overall gist of what's going on. As I said, those non-farm payroll numbers to me don't change the picture for the Fed. It maybe delay it slightly by a month or so or two, but that's it, right? So anyway, tune up. This is good. I like the fact that these weeks where we don't have the head kicker numbers are a lot better. Friday's unemployment numbers. I wish they'd put the unemployment numbers on like Thursday or Wednesday. Thursday would be great. But unfortunately, it's Friday. The RBA is going to be one of the key events. And that's pretty much all we've got. So just roll with the flow, keep an eye on the technicals, and we'll see how this week plays out. I'll give you more details on a daily perspective of where I think the best technical setup is that matches up with the fundamentals. All right, guys, have a good week. All the best. Cheerio.